Hello and welcome to 15 for 15. I am your host, John Zalkin from RKW Residential. 15 for 15 is a new and exciting video series where we interview 15 influential real estate people for 15 minutes each, where we get their perspective on what is happening in real estate during COVID-19. A little bit about RKW. RKW Residential is an award-winning third-party multifamily property management firm with over 20,000 multifamily units under management and a growing footprint spanning 6 states. RKW delivers expertise in multifamily management through its technology, marketing, and customer experience platforms. My guest today is Charles Penan from Aztec Group. As Executive Vice President of Aztec Group, Charles brings over $2.5 billion of closed transaction experience that includes acquisitions, dispositions, development, bridge, equity, mezzanine, joint venture, and traditional debt placement for all types of commercial real estate nationwide. Charles, it is great to see you, and thank you for taking the time to join me on this episode of 15 for 15. I'm really looking forward to hearing what you were seeing in the capital markets in today's environment. Charles, can you please just briefly expand on your bio a little bit, and then let's get right into it. Tell us what you're seeing in the markets today.
For the last 20 years, I've been a capital markets intermediary, arranging all different types of debt and equity for all different types of property nationwide. I've been at Aztec for 11 years, coming up on our 12th anniversary in April, any day now. And the market is crazy. So let's go over it.
Great. So I wanted just to dig into a little bit and touch really general. I know you know these markets really well, and I just would like to hear like the overview of what you're seeing on the lender side, what equity investors are saying. But I guess let's just start off on the lender side, because I know you have a lot of relationships in that world.
On the lender side, it's very fragmented and very different. We work with all different types of lenders, from local banks, regional banks, national banks, international banks, Wall Street conduit money, life insurance companies, pension funds, and debt funds. Very broad range of capital sources we're intermediaries for, in addition to bridge and hard money lenders as well. Every lender has a different perspective of what the situation is and where it's going, but everybody is cautious. Today, the market is uncertain because of how long this pandemic is going to last. So there's no known lasting effect on real estate to people, how they modify or adjust their underwriting standards. And that's where our issues lie.
And so in terms of what lenders, do they have any perspective idea? Because uncertainty is like the key word right now, right? Like people just, we all just don't know. And it doesn't matter. I know you guys do a lot in the hospitality world, in the office world, the development world, the multifamily world.
All worlds.
All worlds, right?
All worlds.
I think each sector is having its own worries and concerns. But in terms of when this may turn, when you see, because I know we're getting some sort of a little bit of good news on the COVID-19 as of the last couple of days, but this is still a long ways to go, probably before we're back to so-called normal. Is there any time frames or what lenders are looking at today? Like, let's say I wanted to borrow money or I wanted to refi. Give me a little insight into that.
And anyone wants money today and close in the next week or two, month from now, 30 days from now, they're kind of screwed. Lenders, a lot of lenders can't underwrite in time to meet those expectations unless it's like a hard money bridge loan. Hard money means 8% plus, could even mean higher than 15% to close quickly. Now, a typical timeline to close would be at least 90 days. Everyone wants to reevaluate the collections for March, April, May, and maybe even June to see what tenants are paying, what tenants will still be there. That's for office, retail, and residential. And then for hotels, at least 6 months, because hotels are literally shut down. All future bookings have been canceled, and no one knows when they'll be able to get back to utilizing hotels. So right now, we're pretty much on a standstill. Unless a deal was imminently closing, those are still closing pretty much as apt, whatever the application says. Maybe a little change in debt coverage ratio requirements, or an interest rate floor being enacted, or some sort of other key fundamentals based on reserves or future unknown. But other than that, I would say it's a 90-day window of really just understanding where the market is for each property, of what tenants are surviving, what tenants are asking for help, and which tenants just never come back. And that's what we're going to have to understand before a lender will get comfortable making a new loan.
Right. So you were talking about the hard money. I mean, it's a general term, right? Just a higher interest rate. Some of the people I know that are in the industry have kind of stopped lending as of today, but you're still seeing groups out there that are lending and as a last resort if you need a short term
I don't
money.
think they're lender of last resort. They're the lender with the quickest execution.
Okay.
So the higher cost of capital is warrants a quick execution. I got a hard money bridge loan quote Friday for land acquisition that our lender backed out on because the world was just uncertain of where it's going to be, and everyone has different value for all property always, but today everyone's value is lower than what the owner thinks it is for all property types, specifically lands. But the hard bridge lenders are active and willing to quote loans today, just at a much higher cost of capital than a traditional bank, if you will.
Walk me through a little bit about your bank, the traditional bank, walking from it, because a lot of these banks, from what I'm hearing, have never done that before. So how did that process work? They just were straight up about it, or just to make the terms just not worthwhile? Walk me through a little bit about what happened.
I've heard and been in the middle of several different scenarios. One where banks are actually in the closing process, specifically for hospitality acquisition or construction loans, both. And in the closing process, they said, thank you, and forward, the end of the conversation, too bad, so sad, it's over, done. You could, and some of them are being very honorable and refunding most of your deposits. Some are like, we spent the money, this is a material adverse change to the market, not our fault, too bad, so sad. Loans that were in process for any other type of property other than hospitality that are, we're have been in like a week or two of closing from when this happened a couple of weeks ago. All lenders are very honorable that we are working with. We've closed 3 loans in the last 2 weeks. But in general, conduit, like Wall Street money, dead on arrival, nothing can happen. They cannot close. They don't know how to price for loans. Life insurance companies that rate lock an application have been very honorable honoring those commitments. However, they might reevaluate the leverage. But in general, we've definitely spoken to a lot of lenders that have exited or halted their marketing of new loans and issuing new applications or taking them to the next level for 90 days. Traditional banks.
Okay. So I had somebody on last week and they said how you treat people today will be remembered for a long time. So, I think in the banking world, if you burn some people, it could be a stigma on you for a little while. So I think
I
it's
think
just,
it's more the bank with the borrowers, how they react versus a borrower with a bank's reaction. I think anyone that has a very long-term relationship with the bank, no matter what it is, they'll work with you. It's a borrower, how they work with the bank. If they arbitrarily stop making mortgage payments, not being an honorable, forthright borrower, saying this is my situation, and have valid backup communication from the tenants of all different types of property, saying this tenant can't open for business, they're not paying me, they're deferring their rent, we don't know what they're going to open. They have to be fully transparent, and that's what banks will remember. I think more so than a bar remembering how a bank handles it. That's my opinion.
let's talk a little bit about on the retail side and hospitality side. I know you're very close into those industries, on the lending side, on the ownership side, and everything.
Yeah.
Through, walk me through a little bit about what you're seeing, and to give us like a boots on the ground type of perspective.
Hospitality is completely dead. No one is looking to acquire new hotels, at least not at the valuation that they were looking at them before. No one's looking to lend on hotels, period. And no one's willing to do anything related to construction of hotels. The market is very scared that you're going to see half-built hotels because the lenders will stop funding. The market's very scared that you're not going to see occupancies above 50% for at least 6 to 9 months from now, because corporate and leisure travel is pretty much evaporated overnight. Conferences, huge generator for the hotel business, over for at least the end of the year. Conferences that we were registered for in September and October have already been canceled. Office, you'll see very little new leasing activity. You'll see tenants all asking for forgiveness or forbearance of rent, because they might not be, if they're a service provider from law firms, accounting firms, they're not going to be receiving payment from their clients, who are also usually small businesses or whatever it is. So they're down to what the business can afford to pay their staff. And last is always the landlord. So the landlord's the ones who are going to get screwed in the short term, because banks can work with the government. The landlords are challenged. And even the small businesses have all these stimuluses available to them that a landlord doesn't right now. So the landlords are the ones who are going to be holding the ball in this short-term cycle, I think.
Interesting. And retail, I know it's very close to your heart.
Retail is also the other bad word in the lending industry right now. Most even national retailers have stopped paying rent arbitrarily. Just if they're not open, they're not paying rent. They're in mom and pop. You never know if they have enough capital to sustain themselves, even come back into business. Restaurants, clothing stores, little boutiques, even the hair salon and nail salon, not having revenue for 1 month can put them in bankruptcy forever. It's really uncertain. And unfortunately, a lot of South Florida retail is mom and pop. All the emerging markets from Wynwood, Lincoln Road, Design District, and Coconut Grove, so many mom and pop retailers that who knows if they'll be able to reopen for business.
Yeah, no, that's really the scary part, is if the nationals are really not paying. I saw like Adidas, I was listening this morning, Adidas, the guy from the CEO of Related out of New York was on, and he was talking about how, Adidas said we're not paying rent. And there was an uproar in Germany from people, and they actually got pressured into sending out the rent payments, because if you have it, you should be able to pay some of it. But I know you're very intertwined and connected into the Wynwood scene, and you know a lot of what's going on there. Those are a lot of mom and pops, and they're not national clients. And if they are, they're on the smaller scale. They're not the Nikes and the of the world. So I can only imagine what's going on there, and how
it's very scary for those markets that are so dynamic and vibrant that one day they can be the center of attention and action. The next day, just being a ghost town. No one's walking around the Wynwood walls. They're closed. It's all mom and pop businesses. And I'm very scared for the proprietors that all of a sudden went to being businesses to nothing, not just Wynwood, everywhere.
Yeah, no, it took 15 years to get Wynwood going, and it went through Zika. It went through a lot of things, and it bounced back. So, my thoughts and prayers with everybody we all know there. We put a lot of time, energy, and effort into it. And we were just at an event there, a few months ago, talking about all this amazing things and the growth. And, it's just amazing how quickly things can change.
Also, this all goes down, this all flows through to when a store or restaurant closes. Their employees that are usually paycheck to paycheck are fired and have no money. They can't pay their rent in the apartment building. They pay the utilities and the cable bill and their groceries before they pay their rent. So fundamentally, it's a trickle-down effect from the business owner to the employee, to the tenant, to the landlord, to the bank. And the ones that are going to lose are, obviously everyone has hardship. The landlords are going to be the ones for all property types that feel the most pain in the short term, unfortunately.
No, I agree. But I'm hoping that the banks, we're hearing a lot of stories where the banks are starting to work with some of the tenants. With some of the landlords. The landlords are working with the tenants. I'll have a lot better data, I'm sure you will too, over the next week to 2 weeks, how collections are. So it's going to be interesting. As I say to everyone, I'm going to have everyone back in the next few weeks so we can compare. Hopefully things are on the upside and not the downside.
Absolutely.
But with that said, I told you 15 minutes flies by when you're having fun.
Always.
Have a good conversation. So I'm going to run you through my lightning round of questions. So you're going to answer a few questions, either yes or no or over under. You ready for your lightning round?
Go, shoot.
Does the 10-year treasury close over or under 1% at the end of the year?
Under.
Next time you're on an airplane, over or under 90 days?
Over.
Next time you attend a networking event, over or under 90 days?
Over.
Next lunch or dinner at a restaurant with a client, over or under 90 days?
Over.
Is the election suspended, yes or no?
No.
Will Trump win or lose?
Win.
Does the stock market end over or under 20,000 at the end of the year?
Over.
Does the US COVID-19 infection rate go over or under 500,000 in the US?
Over.
And a question I know is near and dear to your heart. Do you think you will be on a vacation in the next 6 months?
I hope so. So yes.
Charles, I really want to thank you for joining me today in this episode of
Thank you.
I really, really enjoyed it.
This was great. Thank you.
Everyone, we hope you all stay safe and practice social distancing and make sure to wash your hands. If you have any questions or would like to find this video, please visit rkwresidential.com.